then you're gonna get rid of that property and you're gonna move your money faster,
Right.
right? But if you buy it low and sell it high, let's say it's a 300,000 neighborhood, you want to sell it for 318, 329, that property is gonna sit, and it's gonna sit, and it's gonna sit, and your money that's stuck in this property is gonna sit,
Yeah.
and you're gonna miss out on other deals and opportunities that come up around you
Yeah.
because you're being greedy,
Mm-hmm.
right? So you buy low and sell low, and you get your money and you keep moving to the next deal.
Okay. All right. So have you ever bought or would you ever invest in a property that is owned by another investor that has already been fixed up?
If the numbers are right, yeah.
Okay.
It depends what I'm gonna do with it.
Yeah.
If I'm gonna buy it and hold it and rent it out,
Yeah.
and if everything's done and there's enough equity, enough, the deal's worked out properly, yeah, sure, I'll buy it.
Okay. All right. Cool.
Yeah. All right, so just to give you an introduction, the Brickfront property, we've been around. I'm the owner of the company. We've been around for about 20 years, buying and selling. I've been involved in all kinds of transactions, from construction to building new homes to building additions, to doing commercial apartment buildings. I've done 2 warehouses. I've done 3 office buildings. Bought and sold and just flipped paper and stuff. So I've been involved in all kinds of real estate transactions. Basically, we're a one-stop shop. We have our own property management company. We have our own construction company. We have our own investment company. We have our own money. We have our own real estate agents.
Mm-hmm.
So we basically try to do everything within.
Right.
Okay. And so, but this particular training class here, we're going to talk about residential real estate.
Okay.
The goal is everybody wants to get to commercial real estate. They want to buy shopping centers and 50-unit apartment buildings and 100-unit apartment buildings. Well, people could get there, you know, but you have to start somewhere.
Right.
So residential is the easiest, the most economic way. Build up your cash, build up $200,000, $300,000, $400,000. Then you could go and afford to buy a shopping center.
Mm-hmm.
You know. So what are you going to learn in this particular book? What we're going to talk about is short-term real estate investment and long-term real estate investment.
Right.
Okay, short-term real estate investment is basically where we're buying and flipping. We're buying a property, we're going to wholesale it to somebody else. We're going to, let's say you end up getting it for a contract for $80,000, and you want to flip that contract to somebody else for maybe $90,000, $85,000. Get a $5,000, $10,000 quick fee.
Mm-hmm.
And you would flip those type paper contracts to rehabbers and builders or other investors.
Mm-hmm.
And there's a lot of these clubs everywhere. There's a club in Tyson's Corner. There's one in D.C. There's 2 or 3 right here in PG County.
Mm-hmm.
There's one in Montgomery County. Real estate investment groups. So these guys get together like on a Tuesday, Wednesday, Thursday night. And they have speakers come talk about short sales, they talk about REO deals, they talk about foreclosures, they talk about different things. But it's a whole like-minded type people.
Right.
So you could go there, you could learn,
Mhm.
you could meet people. There's all levels, there's a lot of new people, there's people that have done 1 or 2, 3 deals, and there's people that have done like 20, 30, 40 deals. There's all levels of people that you meet
Right.
in those groups.
Okay.
Yeah. The good thing about going to those groups is making connections,
Right. Networking.
networking, and building up your list, building up your emails, your database. You never know who's going to be able to buy.
Mm-hmm.
You never know who's full of shit,
Mm-hmm.
and you never know who's real.
Right.
You just it's to build a database of people. When you do find something, you can blast it out to them. Say, hey, here's a deal.
Mm-hmm.
You know, here's why it's a deal.
Yeah.
You know. Or the other way you could make money short term is basically buying and flipping, rehab it.
Right.
So you buy it, you rehab it,
Which
you
is
add your
what
value,
you're doing with this property.
which is what I'm doing. And I'm an expert at buying, rehabbing, and flipping. That's my niche.
Right.
And it takes more risk
Mm-hmm.
and it takes more money
Mm-hmm.
to do it this way, but the rewards are bigger.
Right.
Okay?
Mm.
So when you buy it, you rehab it, you fix it up, you market it, and you sell it, you could make 40, 50, 60, 80, $100,000. Depends on the property and depends on the location of the property. Whereas if you buy it and you get it under, well, you never really buy it, you just get it under contract and you flip that contract and you wholesale it to another investor, you could probably make $2,000, $3,000, $4,000 on a wholesale deal. Because most investors aren't going to give you $10,000, $12,000 just for being a middleman. It just ain't going to happen. Most smart investors ain't going to do it. Now, there's probably some investors out there that are doctors and lawyers and dentists that have a full-time career, and you call them up and be like, hey, I got a deal for you. They may not be as in tune with what's really happening in the field, what's really going on.
Right.
And they might say, you're a great sales guy, you're able to convince them, and they say, okay, fine. Then you might be able to make $10,000, $12,000 and flip that property to somebody else. But it really depends on where you get it for.
Right.
You know?
Now, in terms of wholesale, when you're doing that particular transaction, the investor and the seller are able to see what's going on.
Oh, sure. Everything's got to be transparent.
Right. But with a simultaneous transaction where you actually buying and you selling at the same time, they wouldn't be able to see.
Well, you're talking about transactional funding. Is what you're talking about. They will be able to see, but you have to make it. You got to make everything transparent.
Right.
Okay. So if you have a seller and he's agreed to sell this property to you for $75,000, now you are here, but you found another investor that you're going to offload this to for $95,000 or whatever the case is. This person eventually is going to have to get to know this person, because these two are the ones that got to go to the settlement table. He's got the keys and he's got the money. You're the middle guy, right? So you have to be in control of this transaction. You got to make sure that the buyer that's here and the seller that's there, you're here. It's like a hand puppet.
Right.
You got to make sure that they go to the settlement table, and the attorney, make sure that this guy is the owner of the property. He's got the rights to sell it, and they got to be clean titles. So you go to the settlement table, and you tell the settlement company who you are and what your role is amongst this whole transaction, and therefore they know how to pay you. Because as long as they're concerned, they're going to deal with the seller and the buyer. You're the middle. You're acting as an agent, even though you're not an agent. You're acting as if you're the agent. You're putting the whole deal together, right? You're like the broker.
Right.
So you get a broker's fee. And that happens on the second page of the HUD-1 on line number 1300 on the miscellaneous income. They'll put on their broker commission or broker fee of whatever the amount that you guys agreed on.
Okay. Now, in order for me to do that, would there need, I'm assuming there has to be some type of written agreement between me and the buyer to be able to, for me to find between me and the seller, so I can go ahead and make this deal with the investor. There has to be some type of...
Right, so you got the seller, here's you.
Yeah.
So you have to get this transaction locked up.
Right.
You gotta get it locked up, get it under contract, get this guy to commit to you, and you tell this guy, say, hey, look, I need 50 days, I need 60 days to move this product.
Yeah.
Okay? So you have a binding agreement with this guy.
Right.
So now you are here. You're gonna go around, you're gonna market this property to all these different people, and you're like, hey guys, I got this property, I need to get rid of it. It's a great property. Now you gotta start selling.
Right.
You gotta hit the street, and you gotta start marketing this property. Now, if you have a whole pool of people,
It's much easier.
you went to all these different REO clubs, and you met all these people, you got business cards, and your database is 4,000, 5,000, 6,000 names. Now you can just plug that property out there and let everybody know you got this property you want to get rid of it for $95,000. It's a 4-bedroom, 3-bathroom, 2-level, 1-car garage. It needs $20,000 worth of work. You put it out there and let somebody see if they want to come get it. They're going to contact you. Hey, I got this like this sheet that I was telling you about. You know, it's like a deal sheet. You put that deal sheet together, right?
Yeah.
Yeah, and then you promote the deal sheet to people. Here's the LTV. Here's what the property's worth. Here's how much you got to put into it. Yep. And and blast it out there.
Alright.
You gotta keep in mind, real estate, not real estate, but most investors, I wouldn't say all, but most investors are lazy.
Mhm.
They want stuff brought to them. They want to be catered to.
Mhm.
They don't want to do a lot of running around and looking at properties and going from northeast to southeast to Upper Marlboro to Clinton to DC to Clinton. They don't have time for that.
Mhm.
You know what they want to do? They want to sit on their desk and want to talk on the phone and get on the computer and make deals happen and turn their money.
Mhm.
That's what they want to do. Time value of money.
Right.
Most investors are very, very lazy. They want you to cater to them. Bring me the deals. Let me look at the numbers. They make sense, I'll buy it.
Sounds good.
But that's true.
Yeah.
I sit here, I get more stuff done in here than I do running around out there looking at all these different things.
Alright.
Right?
Mhm.
So the goal and objective is to have 20, 30 people out there looking and analyzing and reviewing deals,
Mhm.
bring those deals back, scrub them, and out of those 20, 30, there might be 5 or 6 that might be real deals.
Mhm.
Then out of those deals, either I buy them or I go out to my group of people, my investors, say, hey guys, I need $1 million. I'm going to buy these 5 properties. I need 400,000. I'm going to buy these 2 properties. And this is what I'm going to do to them. I have more credibility than you do,
Mhm.
than most people out here. So I could go to guys out there and say, okay, I need this kind of money. And this is why I think this is a deal. Look at the last 200 properties I've done. I haven't lost money on any single one of them. Yeah, it builds credibility.
Of course.
And then so I'm able to flip it, then you get paid, everybody gets paid, and keep moving. Right?
Okay.
So 2 ways short-term real estate is to buy, flip, and wholesale, quick money. And here's an example. Like if you buy a property for $66,000, you got closing costs. You're always gonna have closing costs when you buy, and you're gonna have closing costs when you sell. On the front end, you're gonna have costs, and on the back end, you're gonna have closing costs. You gotta take these costs into consideration. You got your rehab budget. Most people mess up on the rehab budget. They tend to shoot low.
Mhm.
Oh, I could get this house done for $30,000. Bullshit.
Mhm.
When you start taking down the walls, there might be termite damage. There might be additional pipes broken back there. That budget could go up really high, really quickly,
Yeah.
right? So you got to make sure your margins, you got enough swing in the margin for at least a 10, 15%, miscellaneous. Things always come up. The human eye could only see what the human eye sees.
Right.
You don't know if that drain underground is going to be clogged up.
Right.
You don't know until you get to it.
Mhm.
You could just assume, and you could take calculation, and you could be real cautious, and you could do all these things, but you really don't know until you start working on the project.
Okay.
So that's what I was saying. With the rehab, there's more risk, but there's more reward.
Right. And it makes sense. That's how investment is. The more
Yeah.
risk, you take a chance, great chance, but the rewards are going to be bigger.
Exactly. So here's a quick analysis, and then you got your 6% real estate commission, 3% for the buyers, and 3% to the seller. Now, with the internet being the way the internet is, a lot of people are selling their own properties.
Mhm.
So instead of having to pay 3% and then 3%, that's 6%, a lot of investors have websites and have a group of followers and buyers and marketing techniques and tricks where they will market their own property to save the 3%.
Right.
I mean, I've done it. It works. Now, there's other investors that say don't do it because you don't want to be liable with dealing directly with the buyer and have an agent there and pass the liability on to the agent and let the agent communicate with the other agent and don't never deal with the buyer and the seller. It creates a level of security and
This less responsibility.
Less responsibility. Less thing you got to worry about. But then you have to look at your margins. If you're going to give $8,000 to this guy and $8,000 to this guy, that's $16,000 just to sell the property. Well, if you could sell it yourself and save $8,000, and say, look, you tell the buyer, you said, look, instead of me dealing, I'm going to do for sale by owner,
Mm-hmm.
but I'm going to pass some of the savings on to you to help you with your down payment or help you with your closing costs.
Mm.
You see? So instead of giving this $8,000 to another agent, you take that $8,000, you help the buyer with their closing costs, and therefore you make the deal sweeter for the buyer.
Right. Okay. Okay, and then, is there anything the agent knows that I don't know? As far as closing?
Well, yeah, I mean, there's, legalities and documentation
Right.
and laws and what you're supposed to say, what you're not supposed to say. But here's the thing. A real estate investor and a real estate agent,
Mm-hmm.
okay? Agents have to follow ethics
Yeah.
and guidelines, and there's things they can't say and certain language they can't use.
Right.
They can't say, well, this is a bad area, this is a drug area. They can't use, it's called steering,
Yeah.
redlining, different types. As an investor,
I guess whatever.
we have a gray area where we could say what we can say, but we also have to be cautious and careful. You don't want to mislead people, you don't want to fool people,
Right.
but at the same time, you have a little more flexibility in terms of how you use your tongue.
Okay.
But you still don't want to just say whatever.
Right.
You want to be as ethical and honest as as possible.
Salesperson.
Yeah.
Yeah.
I mean, a used sales guy's not gonna, he's gonna tell you everything about the car,
Right.
and he's gonna try to sell that car, because he's got to put bread on the table.
Right. But he can't say the car flies or anything.
Yeah.
Like that. He can't
know.
oversell the product.
Yeah. So, I don't know. It really depends on the individual.
Right. Okay.
So, but like this particular house, I'm gonna sell the house in Bowie myself,
Mm-hmm.
and this house here in Caston, I'm gonna sell it myself.
Okay.
One, because I have access to market leader, and I have about 50, 60 leads coming in every single month for buyers.
Mhm.
So I've been able to create a platform where I have my own buyers.
Mm-hmm.
So the buyers are coming to me, hey guys, I'm looking for properties. This is what we can afford.
But
Cool.
well, as far as these properties that you want to sell yourself, are you going to sell them to other investors or
No, to a retail person that's going to live in these homes.
Okay.
Yeah.
So they contact you directly.
Yeah, so what we're going to do is once we get done with this house that we're going to go to
Mm-hmm.
after here, once I get everything done, I send out a professional photographer. You got to keep in mind, images is what
Mhm.
sells the property,
Okay.
right? So you get a professional photographer, professional lighting, do a panoramic view, photos of the house, and to make the pictures look real crisp and clean.
Mm-hmm.
And then once you put them on the internet, and there's ways where you could syndicate them
Mm-hmm.
to hundreds and hundreds of different websites, and then once they're out there, and then people look at the property, and then they'll call, hey, I want to come look at this property, right? So the MRIS system, the multi-level marketing system, is where all agents dump all these properties.
Right.
So that's where everybody goes to. Then you have like homesdatabase.com, which is tied to this database. Then you have realtor.com, which is tied to this database. But this database is what feeds out the leads and everybody to all these other different people, right?
Mm-hmm.
So I have a website called servingdcandmaryland.com, where you can come to my website and you can find out about any single property out there in Maryland, DC, Virginia, Pennsylvania, and some other areas as well,
Mm-hmm.
right? You can look at foreclosures, you can look at short sales, you can look at auctions, you can save properties under your profile, you can come back 20, 30 times, it doesn't matter. But every time you come back, I get an email saying, hey, Julio just came back to the website, he just looked at 3 more properties in Hyattsville. He just looked at 3 more properties in College Park. He just looked at 2 more properties in Wheaton. And his buying capacity is 250 to 300,000. Why don't you give him a call?
However, these are not your properties, so those are
No,
just
these are any
listed.
properties
So you're able, okay, so right then and there you will be working
with
you-
buyers.
Okay, because you already have a potential buyer.
Exactly.
You work, okay, so since it's not your property, you're gonna have a potential buyer for that property, and you just contact the seller,
Yeah.
and.
So if you are the seller and you're representing this house,
Mhm.
and that's your listing,
Mhm.
Do you care if I call you, say, hey, I got a buyer that wants to come check out the house?
Of course, I want you to do that.
Right, you want to sell it,
Okay.
right?
Okay, so at that point, when you have all these potential buyers, you will determine if you want to wholesale it or if you want to fix it up and.
Well, most of these buyers that are looking for homes,
Mhm.
like I was telling you, they're between 25 to 45 years old.
Mhm.
A lot of them don't want to do a lot of work. They want homes that are move-in ready.
Right.
They can just move in, and some of them do want properties that may need some cosmetics like new paint, new carpet.
Mhm.
Maybe the kitchen is great the way it is. Maybe they'll keep the bathroom the way it is, and they'll fix it up over time. 2 or 3 years down, they'll keep doing little bit of things over time.
Right. But then, because the some of the properties listed for whatever price, they need some work, like you said.
Sure.
And so, when there is a potential buyer for that particular property, and they get in contact with you or whatever, you see the note, and you contact the seller. If the property needs work, you do the work. Obviously, you have to sell it for a higher price
Sure.
than listed. Okay. Okay. That makes sense.
It's starting to click.
Yeah. Yeah, man.
Yeah. All right, so long term, let's talk about long term investments. So long term investments is where people buy and hold.
Right.
Buy and hold for cash flow.
Right.
But, you have to look at a lot of things in real estate. It's not just about, you gotta look at inflation,
Mm-hmm.
you gotta look at taxes, you have to look at what the economy is doing, you gotta look at the T-bond, look at the gold, look at the metal, commodities, look at the stocks. Look at all these things have an impact on
Mm-hmm.
appreciation values of real estate. Right? So if you looked at a chart for like the Standards and Poor's or the NASDAQ exchange
Mm-hmm.
for 100 years, look at the chart.
Mm-hmm.
You'll see that the average growth in stock market is negative.
That's not cool.
Then if you look at the real estate chart for 100 years, the average appreciation in real estate has been less than like 2.5%, 3%. But there's an appreciation,
Mm-hmm.
right? But then if you look at everything else that we know about real estate in terms of land and the supply and demand of land
Mm-hmm.
and the population growth and the kids that are 10 today are going to be 20 and the kids that are 20 are going to be 30
Mm-hmm.
and they're going to need to buy a house, they're going to move out
Mm-hmm.
from a mom and dad's basement, they're going to want to rent their own.
Mm-hmm.
Right? If you look at all this stuff,
Mm-hmm.
then you look at real estate is a supply and demand type of commodity.
Right.
Right? So if you look at, and everything's based on location. So don't worry about what's happening in Connecticut or North Carolina or Detroit or Ohio or Florida or Nevada. Worry about what's going on in your own backyard.
Mm-hmm.
Because this is what matters.
Mm-hmm.
DC, Maryland, and Virginia, and things that are happening here. So everybody needs to just focus on their own backyard. I don't care what Nevada's doing. I don't care what Detroit's doing. I don't care what Florida's doing. Because that doesn't have a direct impact on my backyard. I know what my backyard is doing. We have jobs coming in. We got people coming in. We have a population growth. There's a shortage of properties already in DC.
Mm-hmm.
Okay? There's more people that want to buy stuff in DC than there's actually fixed up properties right now. Right? So there's more supply of buyers than less supply of property. So you got to look at all those factors to determine long-term and short-term.
Well, what source do you use to get all this data?
It's just research, man.
Mm-hmm.
You got government websites. You got the Census Bureau. You got the Department of Treasury. I look at what Sheila Bair is doing. I look at what Tim Geithner's doing. I look at to see what Barney Frank that sits on the Housing Commission. I see what they're doing. I look at to see what the government's doing.
Mm-hmm.
What new laws are going to be passed down? How's that going to have an impact on the buyers? How's that going to have an impact on mortgage companies? How's it going to have an impact on lenders? Are they going to loosen up the guidelines so more people could buy?
Mm-hmm.
Are they going to tighten up the guidelines? Is that going to have a direct impact? So I look at those type of things. I don't really look at a lot of, I look at what the government is doing overall. That's my main source. And then I look at economists, and see what they're doing and see what they're predicting, and then I kind of make my own analysis of what's happening in my own backyard and kind of just connect the dots.
Mm-hmm.
So I don't really have a formula. It's just something that I've just been doing over the years,
Mm-hmm.
and I kind of created my own way of thinking.
Right. No, it makes sense. It makes sense. I mean,
You know?
information is money. Information is the new money.
So if you do long term, again, if you buy this house, you want to make sure that if you do long term, what you want to find out what the government is doing or what the community is doing around this property. Is there going to be a new road? Is there going to be a new shopping center? Is there going to be a new subway? Is there going to be new development of homes? Is there going to be a new school district? I mean, how is this property going to appreciate in the next 2, 3, 4, 5, 6, 10 years? That's long term.
Mm-hmm.
So if you buy something in an area that's going to have an upswing, right, then your property is going to go up.
Right.
But if you buy something in an area where it's still going to be stale and there's no new growth, there's no new community projects, no new state government type projects, then there's no new retail or shopping center, then you're going to be pretty much at an idle,
Stay.
and you're not going to really make, and you may possibly get bad tenants, and then you have to look at the turnover.
Mm-hmm.
Every time a tenant comes in, rents, and leaves, it's going to cost you at least $3,000 to $4,000 to fix that property up and to get it re-rented out.
Mm-hmm.
You're going to have to maybe replace the carpet,
Right.
paint, maybe they messed up the kitchen,
Mm-hmm.
maybe they messed up some lighting. So it's going to cost you money to advertise, to drive down there, to talk to the tenants. It's going to be off the market, so you're going to have to screen people. It's a time-consuming process,
Mm-hmm.
right? So if you do have a good tenant, keep them in there. And don't raise their rent. If they're paying you on the 1st and the 3rd of every single month, they don't call you, they fix things up around the house, they take care of little cracks and nicks and water leaks themselves, and they don't have a whole bunch of commotion and complaints and violations, keep them in the property.
Mm-hmm.
Because they're paying you every single month.
Right.
Reward them sometimes. And sometimes I'll say, look guys, I'm coming down there. I have about 32 properties now that I rent out, that I own in Virginia, DC, and Maryland.
Mm-hmm.
So I'll call my guys and say, hey, I'm coming down there, we're doing an inspection. Okay? Just check and make sure everything's okay. Making sure that the water's not leaking, which will help your water bill. Make sure the everything's okay. We'll check the furnace to make sure the furnace is running smooth. Make sure the filter is changed. And if the stove is bad, maybe we'll give them a new stove. If the refrigerator is not performing properly, maybe give them a new refrigerator. But give them an incentive to stay. Well, what are you doing? It's your property.
Mm-hmm.
So when you buy a new refrigerator for your property, who do you help? Yourself.
Mm-hmm. Okay, so with your properties in particular, do you take care of the utilities, or that's the
No, the tenants take care of the utilities.
Okay.
Yeah, it's their responsibility to take care of the utilities.
Mm-hmm.
But the thing is, in order to give them an incentive to stay,
Mm-hmm.
give them something. Give them a new refrigerator. Give them a new stove. Give them a new washing machine.
Right.
Give them a new dryer. Because it's your property.
Yeah.
All you're doing is just reinvesting in your property.
Mm-hmm.
But if they're a good tenant, why not?
Right.
Now, if they're a terrible tenant, they're breaking something every single day, well, then you don't want to reward bad people.
No.
You want them to leave.
Mm-hmm.
And then when they leave, get in a new tenant and then reward the new tenant. You know what I mean? So, long term has consequences and risk as well.
Mm-hmm.
But again, you have to buy it right, and you got to buy in the right community, and you got to buy in the community that is inclining, appreciating,
Mm-hmm.
rather than declining.
Right.
Okay, you still got to do your demographic, your research, your geographic. Look at the metro, look at the bus stops, look at all these things. How people gonna get around when there's a snowstorm, when the city shut down? Can they get access to food, water, shelter? Look at all these things, and see what the state and the county is doing. A lot of times, you could go to your Hydesville.com website, and you can see what the community is doing. You can see what the mayor is doing. You can see if there's any money funded towards new projects, or a shopping center, or a new school, or whatever.
Mm-hmm.
You can look at all these things. So a lot of times with the internet, man, there's so much free information. There's so you could plug in anything and something will come up,
Right.
you know? And then you just gotta be a Sherlock Holmes and start researching.
And most of your properties, they are, well, your commercial properties, are they like buildings or homes?
Most of my rental properties are homes.
Okay.